Oh, hello everyone, it's Susie, Crypto Granny here. The date is the 2nd of the 7th, 2022, the 2nd of July, new month, new financial year for Australians and for other countries as well, particularly, Europe and the US and Japan. We're now into the first couple of days in July, and the time in Amsterdam is 19:11 p.m. on a Saturday, late-ish afternoon for me anyway. And I just want to go through what happened over the market last week. Within Slack, I keep my own notes, like under Susie, for what I found and saw that was important in a week, with crypto news and financial markets news. And I keep it in my own folder, but also we update everything on Slack. My sister-in-law and other people update on Slack, so we're up to date on all the news stories and everything else. Now, the market cap at the moment is 883.232 bill. It's lower than the last big rally from, let me think, when was that? The big last rally we had was November 2022 to May 2021. And before November 2022, if I remember rightly, the market cap was over 900 million. Then it went up from 900 billion, I should say, to 3 trillion in May, and then it fell, and now we're back at 883 bill, which is extremely cheap, I got to tell you, for the market cap of cryptocurrency all up. Liquidity is low at 3.873 bill. Bitcoin dominance is 41.66%. Bitcoin at the moment is 19,284 and Ethereum is 105.5. So they have hit Bitcoin through the $20,000 level, and we just have to see how it operates, how it performs from here. But I'm actually saying this market is bottoming, okay? Now, for me, in terms of my investment portfolio, I'm honestly indifferent whether I buy Bitcoin at 16,000 or 15,000 or 19 or 20 or 21, because my bigger view is Bitcoin's going to be worth more than 100,000 in the next 6 to 12 months, okay? And you see, that's why I don't look for absolute bottoms or absolute tops. The professionals never do. We get the cream in between. It's the amateurs that look for bottoms and the amateurs that look for tops. Now, I'm saying overall, I believe the cryptocurrency market is bottoming. And I sent out a couple of videos last week at the internal Patreon and maybe one on YouTube one about I believe the market is bottoming, and every market is bottoming as far as I'm concerned, and it's putting in a basing price action, okay? So you can see it in the US equity market last night. You can see it in, the US equity market bounced quite a lot last night, actually, heaps. It got through to something like 31,000 from what I can remember. I need to go back in there because I was trading it, on the Dow index. And, every short person, every person that was shorting it, basically was getting killed. And I just felt that the market was going to bounce for sure. And it did. And you can see that with other risk assets as well, okay? So I do believe this market has bottomed, and I'm not changing my view on this. Yes, we might see, $1,000, big deal. But the bigger picture, $1,000 on the downside, but the bigger picture is, what is it going to give us on the upside, okay? And that's what I'm looking at. You get the cream in between, you never get the bottom, and you never, ever get the top. And that is just pretty much for amateurs, as I said, right? So if I go into my trading on the Dow and everything else that I was doing last night, the Dow's currently at 31,070, and it certainly looks very good on the 4-hour technicals. It is basing and it's bouncing, and it might even get up to potentially 31,200, and then maybe a bigger picture, maybe up to 31,700, something like that. Now, with that backdrop, seriously, the cryptocurrency market should be rallying. Also, don't forget, yields have been coming down because people are actually seeing a lot of weakness in the US data, okay, and including other data all over the world. So global yields for bonds have been coming down quite quickly in the last week. So I want you to be aware of that as well. Yields have come down a lot. So we go to the US yield curve just very quickly and have a look at that, because seriously, the equity market is literally, about 90% correlated, 95% correlated to US dollar interest rates. And if you go to the US curve at the moment, the 10-year bond rate is at 2.904%. Now, remember, that was around 3.6%. So it's come down quite a lot in the last week or so, okay? And that's significant. Also, volatility has come down quite a lot in the last week. So there's a lot of reasons why I'm calling this a bottom. Yes, I've had all my dissenters on Twitter and everything else. Every time it goes down $500 on Bitcoin, they're going, oh, Sue, what do you know? It's still going down, but they don't get it. The downside from here on Bitcoin max is probably about $5,000 max. The bigger picture is up, 100,000 plus. So what am I going to do? Am I going to sell for $2,000 on the downside, down on Bitcoin, or am I going to pick up Bitcoin at 20,000 or 19 or whatever and hold for the next year where the thing's going to be 100,000? I know what I'm going to do, people. I'm going to buy as it slowly falls in increments like we normally do, and then we just hold until it's well over 100,000 when there'll be a shortage of Bitcoin and there's no Bitcoin left. And you can see that because the exchanges are short Bitcoin. The reserves are way down from last year. They only hold about 9% of Bitcoin. A lot of it's going to people's wallets, their hardware wallets, and you can just see that very, very clearly, right? So let's just get into this, and I'll tell you what I've been looking at on my Slack. And, I literally start the week, looking at stories and what captures my interest. And this is a little bit different to what Ollie does, but these are some of the things I look at. And I got to be honest with you, I look at everything, right? I really do. So, not only all the technical stuff, but certainly all the economic stuff, all the technology stuff, you name it, okay? So the first thing, last week, there was mega liquidations, right? Whether the traders got long or short, they were just getting liquidated, hand over fist. 200 million, a billion, another 500 million, whatever. It's a very hard traders market at the moment. Plus, if you do short down here, everyone is shorting this market. As I said, there could be a short squeeze where everyone's shorting the market, yet the market comes moving up and people get squeezed because they're short and they've got to buy back because they're losing too much money. Okay, so we have seen that rate rises, have basically, caused problems in these markets. But, I believe that continual rate rises, the market's going to look through it because it's going to cause, the more they rate rise, right, the more it's going to, cause economic slowness and everything else, okay? That's another problem, right? And that's not great. Now, we have seen that Bitcoin has performed much better than Ethereum over the last couple of months, and there's a lot of reasons for that, and I've outlined that many times. I don't like Ethereum. It's still proof of work. They're struggling to go to proof of stake. I believe it's terribly overvalued, Ethereum. I think Binance should be in its place, or even XRP. Seriously, I really do. Now, last week we saw a record high of outflows, right? Of 423 million. And it was mainly institutional investors, and there was a main culprit from Canada, okay, who had Bitcoin ETF. People were shorting it, and he had to liquidate something like $198 million worth of Bitcoin, and he got killed, okay? So there's a lot of things going on last week, which was bringing this market down, below that 20 grand, okay? Also we had things like, for example, the Zimbabwe, came out with inflation of 192% in June, prior to 132% prior to that month. Everyone else came out with huge inflation numbers. The UK was over 9%. Other countries in the world were around 8%. Europe particularly, we saw America at 8.6%. So everyone is talking about inflation and the slowdown in economic growth, okay? Everyone. And, that's an ongoing discussion, right? A continual discussion, right? And there's been a lot of analysis out there about, Bitcoin's real value and how much is Bitcoin worth. JP Morgan came out and said Bitcoin is a buy here. So did Deutsche Bank. They said Bitcoin could get back to 28 to 30,000 very quickly. Now, I do believe that. I believe Bitcoin could get back to 28 8,000 very, very quickly. Also, what else caught my attention is central bank holdings of gold. Now, I think gold is also going to really start moving. If we go to central bank holdings from 2001 to 2021, according to the World Gold Council, back in 2001, there was 33,000 tons of gold held by central banks, right? And then at its lowest point, it dipped down in 2008, and rightly so, because it was the GFC. It tipped down to about just under 29,000 tons of gold. Now, years ago, 15, 20, 25 years ago, maybe 30, the central banks were selling all their gold, right? So we saw, 10 years or more, the central bank was selling its gold. Now, from 2008, they started raising the buying of their gold, right? So basically, central banks, rather than holding about 29,000 tons of gold, are now holding about 35,000 tons of gold. And we know Russia and China are accumulating gold. Okay, and that's very sensible because gold will hold its value in times of economic depression, recession, and high inflation. Okay, and the Chinese love gold, and don't forget India loves gold. So they've been accumulating gold as well. Okay, plus Russia that also sees gold as a store of value. Okay, these are some of the charts that I look at, right? And, it gives me lots of ideas and I follow things up and everything else. Also we've seen, the emerging market index really underperform the US indices for equities. But what we're starting to see on the emerging market indices is a double bottom. Okay, the MSCI Emerging Market Index gave us a double bottom from May to June of 983, 989, and that is definitely a double bottom, and it's starting to move up, just like the S&P is starting to move up from 3637, and we saw that overnight in equity markets. Okay, very important. A lot of the markets I'm looking at are showing double bottoms. The S&P is currently at 3825 and it moved up over 1% on Friday night. And we're starting to see double bottoms in other markets, which is very, very important, okay? If we're seeing double bottoms in other markets, then we're going to see more. We're going to see Bitcoin have a double bottom, and we're going to see certainly the equity market have a double bottom, which it's already had, and it's moving up. Okay, another some of the global indicators that I do look at, which are always very interesting to me, global PMI. Okay, this is manufacturing around the world. Now, generally, 50 is a signal of expansion, but we do see, in its heyday, global PMI, back in May 2021 was at 56, right? This is Global Purchasing Manager indicator, which basically purchasing managers have to buy things for product and manufacturing. But if that goes down, it means they're not purchasing as much for product and manufacturing, and that's heading towards 50. Now, some countries in the world have negative PMI. It's under 50, like China just recently, okay? And that's not a great thing. Also, I look at, employment, right? And the US employment data is very whippy. Back in, what do we got? Back in April 2020, it was down 21,000 odd, and now it's supposed to be up plus 390K, which I don't actually believe, okay? US consumer spending has come down dramatically. One stage at the high, May 20, it was at 8.6%. Now it's only 0.2%. US consumer spending is coming off fast, okay? And it's almost, at the worst, it was negative 12% because of COVID, but it's coming down below the zero line, which is not great. US personal consumption expenditure, which is the Federal Reserve's preferred measure of inflation, where you have to pay for everything out of your personal consumption income, and that's gone up according to their figure, 6.3%. Now, that's their inflation measure, apart from just a CPI, Consumer Price Index. But, if you look at the lows of that thing, in April 2020, they reckon it was 0.4, And going back 2009 minus 1.5, right? But I hasten to tell you this, I hasten to add that I believe that personal consumption expenditure should be at 13 or 14%, killing the US consumer, okay? Now, if we look at Brazil's GDP, a proxy for commodity exporters throughout the world, because they do a lot of exporting, you know, that thing got up to 12% in 2021. This is in Brazil, and now it's down to 1.69%, which means an emerging economy like Brazil is slowing, okay? Their gross domestic product is slowing. We also see Chile exports of copper increasing because the price of copper is going up. We certainly see euro area inflation up at 8.6 right now, which is huge. And yet November 2020, euro area inflation was basically, what was it, negative. It was 0.31. Now, if we look at the German IFO figures, which are also manufacturing figures, construction, companies, service, retail, but manufacturing, you know, from 2020, it was literally off a cliff at 75. It bounced to 100, and now currently it's 92, showing weakness. I mean, some of these are very interesting. Also, if you look at China's manufacturing PMI, it's right on 50 and going lower. Okay, last month, you know, it got to 47, which is very, very weak, okay? Very weak indeed, right? And we're even seeing South Korean exports come off quite a lot. South Korean exports were up 45%. Clearly, they were exporting to Russia and China, and now they're only 5.4%. So we're seeing a lot of weakness in the rest of the world, people. A lot of weakness, and this is the problem. If the Fed continue to rate rise, they're going to cause a depression. Already, China is in a lot of trouble, right? China's figures for GDP are getting lower by the month, and they're not exporting as much, and, you know, inflation's going through the roof, and they need resources. Now, we already know China deals with Russia. All their trade with Russia's up this year 55%. Okay, and they're trading in yuan, and they're trading in the ruble digital currency to avoid the Americans and the settlement issues with SWIFT and the Americans closing down their accounts, okay? Also, oil trading is up massively with China and Russia. I've seen figures from 35% to 40 to 48%, something like that. So China and Russia are friends, okay? And that tells us a lot about what's going on in the world, particularly with China, with Russia, I should say, and the Ukraine, and people being concerned about that, but also what's happening with China in Southeast Asia, okay? They wanted to set up a defence area on the Solomon Islands, which is like 2,000 miles away from Australia, and people were really seriously worried about that, you know, and then they've got their fingers in all pies where countries are literally gone broke, like Sri Lanka, like India, like parts of Africa. I mean, the Chinese are expanding everywhere. And they start owning the country because they've given them, you know, they've given them lendings, borrowings, okay? People that need the money, the countries that need the money, they've been given money by China. Excuse me. Now, another chart that really interests me, and I love charts, was a weekly relative performance on all the other asset classes. And last week, between, you know, the 23rd to basically now, oats was up 10%. Week on week, which is a massive, you've got to multiply that by 52 days in the year. 10% by 52 days in the year, if it kept going up, that's 520% per annum, right? Oats, food, soybean was up, you know, 8%. People need food. Lumber was up by 7%. Soybean oil up 6.2, right? You know, then we've got oils up, corn was up, rice was up, which is very worrying because the world that lives in poverty, 4.8 billion people rely on rice. And if rough rice gets too high in terms of prices, you're going to see starvation, right? And we're already seeing that in parts of the world like Somalia. Also, live cattle went up, hogs went up, anything from 1.5% to 2%. So we're seeing the soft commodities going up a lot, and the hard commodities as well, okay? Heating oil did come back down yesterday, over the week, down about 10%, but it was up at sky high figures, okay? heating oil's up something like 500%, for a year or two, right? So the thing is, we've seen some dramatic price moves, seriously, dramatic price moves in a week. And we're seeing it across all markets, whether it be interest rates, whether it be crypto, whether it be equities, whether it be anything else, right? Another thing I look at is the IG client sentiment. And it tells me how people are positioned, right? People are positioned long for gold, 80-odd%, 90%. Silver, they're positioned long for gold. They're long the DAX. They're long the Aussie US, which I think is a mistake. They should be short. They're long Euro against Swissy. They're long the pound. They're long Kiwi. Again, these are against US dollars. I think US dollars will go higher, and so they're crazy being long their own currency and short the US, right? That's what we see here, right? And they're pretty much just slightly long oil, right? And the interesting thing is they're short the US dollar, which really surprises me because the US are going to rate hike more aggressively than anyone else. So I just think they're completely wrong on that, being short the US dollar. I would be long the US dollar and short the Aussie US, right? Another thing that came to my attention was China is gobbling up all the world's copper supply. They have 54% of the world's copper supply, which is super scary, right? Copper global consumption, China, 54%. Asia, excluding China, 21%. Europe, 13%. North America, 9%, and other. And this is the problem. The Chinese are huge, huge consumers, right? And they will just snap up everything, anything to do with building their economy. Very, very scary, okay? Very, very scary. I got to tell you that. Then there's another article, Morgan Stanley, how bad is the next recession going to be? Well, I actually believe it will be a depression, okay? Recessions are 2 quarters of negative gross domestic product, but I believe we're coming into depression, people. You cannot have wages going down, food prices and the cost of living going through the roof, 25%, interest rates going through the roof, and low growth. This is a nightmare. It's the worst situation for any economist, right? Or anyone trying to control stuff through the central banks. Very, very scary stuff. Another thing, we've seen a lot of derivatives being done, in all different markets and also on the cryptocurrency market. And the derivatives seem to be short. So the risk of getting a short squeeze rally is getting higher and higher. The market will stay down here, but it's trying to consolidate and, there will be a move. And when that move comes, watch out, people, watch out. Okay, we have seen particular countries in the US, the equity shares come off quite substantially. Keeping in mind that year to date, according to these figures, the SPY is only down 20.51%, which is not a lot, people. And yet the Bitcoin is down year to date 59%, which is a joke because the equity market has been totally overpriced and overvalued for a long time. And it should have been more hit than the cryptocurrency market, which is just a joke, okay? So you need to keep that in mind as well. So we do know there are a lot of options positions out there and a lot of short selling, which eventually those people will get, I believe, carted off to the races simply because, there's not enough physical Bitcoin sitting on the exchanges. And we do find that with futures prices of Bitcoin and Ethereum being lower than the physical price of Bitcoin, right, and Ethereum. Now, Bitcoin's physical price was only $150 over the futures price, and Ethereum was like $1 or $2. It wasn't that much, right? Now, we also saw Micron plunge after its catastrophic guidance figures concerns worst. This is the company, don't forget, that makes conductors, right? And it's a bellwether stock. Now, last year, this thing was as high as a kite because they were short, of semiconductors and graphic boards and all these things for the miners and the ASIC machines. But now we know what's happening with the miners. They're losing so much money because Bitcoin at 19,000 doesn't give them enough money to cover their costs, you see. They obviously get 6.25 for every time they validate contract, 6.25 and validate the blockchain on Bitcoin. But it's a 6.25. That's right, 6.25. Bitcoin. But the lower Bitcoin is, the less money they get. You see, but the cost of using electricity and everything else is huge, right? And we've seen the miners are selling their rigs and everything else. Okay, so it's very, very interesting what we're seeing here. Now, year to date, and I gave you some weekly figures, but year to date, heating oil is up 66%, gasoline up 60%, natural gas 49%, oil is up 50%, rice is up 12%, wheat 15%, soybeans 16%, soybean oil 18%, orange juice 24%, lean hogs 41%, 25%. I mean, it's all food, people, and it's massive, 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 massive. I've got to tell you that. So, very interesting, and yeah, very, very interesting indeed when we look at this, right? If we look at government bonds, for example, and we go right back to 1915, government bonds are on the course for the worst year since 1865, right? 1865, bonds go back a long time, right? And, bonds this year alone are already down about 30% or more, right? In some cases higher, depending on which bond we're talking about. Negative return like this is huge. And this was from the Bank of America's global research, just unbelievable. I mean, even when the UK came off the gold standard, right, back at around it's hard to tell, between 1927 and 30-ish, bonds were down about 29%. And then the next year, they went up 40%, right? Amazing, amazing. And just before the war, they went up another 42%, which is understandable. But, when you look at that, it's, the figures are quite outstanding. Then there's another story about top crypto firms go on hunt for acquisition targets as market crashes. And we've seen that with FTX. We invest in the exchange of FTX. Sam Bankman-Fried, who's an incredible guy, and it looks like he's going to buy Blockfolio, right? Not for 25 million, clearly very cheap. It'd be much more like 750 million. If we go to sentiment, we do find that XRP network hits its highest daily amount of unique interacting addresses in nearly 2.5 years. XRP is killing it, right? Last week they did 200,000 daily active addresses for the first time since February 2020. And honestly, huge trades are going through on XRP at the moment. The whales are buying more and more XRP, which is a great story. Plus they got a new client, Colombia, I think it was, a central bank, and they're going to do stuff with them on their central bank digital currency, right? Which is a great story indeed, right? And we do see a lot of economists are now cutting their growth propositions for the US next year, but they're also talking about, JP Morgan's even talking about a global oil price reaching $300 a barrel if Russia stops exporting oil. Now, don't forget, Russia's the largest oil exporter in the world, and the US has to go down to its security stock of oil to release it to the public. Now, $380 per barrel of oil is a scary story. What do you think that's going to do to the US economy that imports oil, or anyone else in the world that imports oil, right? It's a killer. That will cause depression like you've never seen before. And then on the other side, Exxon Mobil, which is the biggest oil refiner in the world, one of them, for a second quarter came up with $5.5 billion in windfall profits because of near record gasoline prices. I mean, this is telling you something. Plus, coupled with that, There is, the virus is still going ahead as usual, COVID-19, and no one's watching it, babies. I watch it all the time, but, the figures have gone up astronomically. It went through 500 million, and now all of a sudden we're looking at 555 million this year. Every day about 3 million is adding, right? It's just unbelievable. Incredible. Also coupled with that, we are seeing prices of houses go down everywhere, okay? And it's happening fast, 10 to 15% per month. We're starting to see it in Australia, New Zealand, the UK, even America, everywhere, okay? Scary, scary stuff, right? Very, very scary stuff, and we're seeing home sellers are slashing their prices, in a sudden halt to pandemic boom. That's what we see. Then the World's Happiness Index came out this week, and it shows that we are all the most unhappiest that we've ever been for more than 100 years, right? The most unhappiest. People are stressed. They're concerned about World War III. They're worried about the environment, the damage to the environment. They're worried about their jobs. They're worried about the cost of living. It's a shocker. Seriously, people are under more stress now than ever before, even with technology, right? And that's very scary. Then we look at the UK. The Brits are more pessimistic than any other time in the last half a century, according to their consumer confidence barometer, right? And that consensus is they're around negative 55, right? And that was even worse than the oil shock in 1974 with a negative 22, okay? So this tells you something. And the politicians and that are not listening, people. They don't care about people and they're not listening. They're going to continue to rate rise. There's an expectation the Reserve Bank of Australia will rate rise anything from 25 to 50 basis points in July, regardless of what it does to people, the average person, right? Already property prices are falling in Australia fast, okay, really quickly, and the thing is, Australia's, indebtedness to housing is at the highest of all the countries in the world, in the developed countries. The price of a house to most Australians' average income is 120. Now, what that means is the house price to income ratio in Australia of 120, we get $100 of income, and they're saying we need $120 of income to fund for a house. So what that means is out of our $100, we have borrowed another 20% more to fund to buy a house, right? And if we lose our job, we're going to be absolutely stuffed. We have the highest debt in the world where we need to find an extra $20 out of our total income to buy a house. And that's very scary, okay? Very, very scary. And I think in Australia, you will see panic selling because the market's gone up so high so quickly and people have a lot of debt. And that's one of the reasons why I sold my house recently, right? In June, because I can see this building and it's coming off. Even this month, since I sold my house, the market's down about 10%. Everything's being private sold. And when it's private sales, it means the real estate agent can't actually sell the house, okay? Normally it's done by auction in Australia, normally. So this is very, very scary indeed, right? Very, very scary. I've got to tell you this. And, and then we have this Russian thing that doesn't seem to want to go away. The Turks have let in, and the NATO are waiting for the Turks to agree to let in Sweden and Finland because they're very concerned about the Russian threat. Putin did say a couple of weeks ago if that happened, they'd see that against, America declaring war on them. I mean, he's a madman. Who knows where this is going to go? But, clearly the NATO is already supplying arms and goods to the Ukraine. So really NATO and the, parts of Europe are in that as well as America, there is a war going on, people, and it's pretty bad. There's no doubt about it. There is a war going on. So we have seen that trading in the last week was dominated by Bitcoin, Ethereum, US Tether, and DOT. There's a lot of big hedge sellers trying to sell down US Tether. and trying to sell down USDD, which is Tron stablecoin. Now, I do believe they'd be wrong with Tron. Tron had literally $16 billion to fight hedge funds. And thus, you've seen the USDD go from 0.97, was originally one, of course, 0.97, the stablecoin, the index coin, back to 0.9901. I do believe the sellers on Tron will be carted away, okay? And it'll be a massive short squeeze, right? And they've been trying to do it to US Tether as well. But, you know, $63 billion or something, you can't fight that, really. You know, it's a big position for any hedge fund, okay? That's for sure. So, you know, we know the miners are facing margin calls and they're selling, you know, all their equipment and everything else, you know, and it's because of a bear market. You know, we know that, you know, things have got worse. There's no doubt about it. The miners are selling heaps of stuff, you know, but I do believe, even in saying that, I believe this market is bottoming. We saw El Salvador pick up another, you know, lot of Bitcoin, you know, 80 at 19,000. We saw Michael Sayer of MicroStrategy pick up another 480. Bitcoin, his average price is 30,664, right? And he's got nearly 130,000 Bitcoin, right? You know, I think we are bottoming, people, and that's my view, and I will stick to it. You know, markets make, you know, sometimes it takes a week or two for a bottom. It doesn't exactly, you know, fall on the same, you know, number or something, you know, but you can tell the market's bottoming because it's getting harder and to sell down here. The market's very resistant and resilient, okay? And, you know, I believe this market is so cheap, but, you know, the problem is, you know, the Fed and every other central bank in the world is going to kill the markets, you know, by rate rising. Now, also, there's rumours out there of insolvency plans with Qcoin. And honestly, I don't believe that. You know, I think Qcoin are pretty short up. They do have a fund, and I don't believe that they are in trouble at all. I don't think they had a lot of exposure to Terra, Luna, or anyone. It's just people trying to make people worried, okay? So I don't have a lot of money sitting on Qcoin, but I'm pretty comfortable with my Qcoin that is sitting on Qcoin. Honestly, I do. This is just FUD, and honestly, there's a lot of FUD out there, that's for sure. When it comes to, you know, and it's very easy to scare the market, okay? Because people have been beaten and bashed around the head. But either way, look, I think Qcoin is pretty safe. Also, the FTX guy, Sam Bankman-Fried, had made a statement just on Thursday or Friday that they're going to potentially take over BlockFi, I should say. They've struck a $680 million deal with FTX US. The firm announced on Friday part of the deal includes a $400 million credit facility, and it provides FTX an option to acquire the firm at a price of up to $240 million. And all I can say is Sam Bankman-Fried is a genius. FTX were invested in. Binance, Chang Zhang is also a genius. Changpeng Zhao, and we buy Binance as well. These two are going to be in the top 5 cryptos in the next 2 years. I have no doubt about that. Or the top 3. Anyway, guys and girls, that's enough of me. I've battled on, don't know why, but I do believe this market's going to bounce. You just got to stay with me on this. Cheers, guys. I hope that helps. Got any questions, please do come back to me. Thank you, darlings, and have a great weekend.